Good morning, good morning. How are you guys today? Nice to have you. Buongiorno. Welcome back to another Friday morning. And just like we did last Friday, I'd like to take a look at the Forex market and do an overview for you guys. Show you the supply and demand dynamics that's taking place on the market. And, we did some analysis last week, and we did some projections specifically on gold. If you remember, we did a projection on gold of where price could go, and I laid out exactly how we got there using, well, that was on earlier this week. Projection on gold using the CFTC data and how far we are from them reaching maximum long positions, and what it would look like if they were to add to their longs until they reach maximum positions. So we're going to look at gold, we're going to look at oil, we'll drop into silver and take a look at that as well, and then we'll look at all the major currency pairs and see what the supply and demand dynamic of the charts are. Okay. As you know, I just closed a US dollar Japanese yen trade for profits. That was a wonderful trade that played out perfectly. We shorted the US dollar Japanese yen, and that worked out. Previously to that, we had a short on the euro US dollar, which we closed for profits. And then we saw signs that dollar pairs were going to drop, which would put upside pressure on the euro. So we closed our position, took our profits, and then we entered into a short position on the US dollar Japanese yen. So first things first, we're looking at gold right here. And so we've gone a little bit higher, I think, since our last session talking about gold. And we do have upside targets here. Okay. If the CFTC reports are going to show us that the banks are going to continue with going in long, that's a very reasonable target to have for price to go up to about there. Okay. But that's only, again, if the banks want to continue adding to their long positions. That's 2969. Okay. If they're going to continue adding to their long positions, which they could easily do, we suspect that price would go all the way up there. Other than that, I mean, gold is bullish. You can't say that it's not. It's just you have to know how much upside potential there is on the charts, okay? Let's go over to silver. So silver, we've talked about silver before. I told you that we have a range, okay? We have supply up here, and we have demand down here. As you can see, price came down near the demand zone down here, reversed, and is heading back up to the same supply that was contacted previously. Okay, so as long as this supply holds, we suspect a move to the downside will likely take place. Okay, as you can see, we have demand down here, so it's within reason to believe that that demand might come into play and cause pressure to the upside. Okay, bottom line is we have something really important that just took place here on the weekly chart. If you look here, you'll see that a supply zone has been removed. That was a significant supply zone that was going to hold price down unless it got removed. It got removed. Now, this basically opens up the chart for a move higher, okay? We just need this chart here to comply with that, because right now it's the daily chart that's holding price down. So we got that signal to the upside on the weekly chart suggesting that it's going to likely have more pressure to the upside. But now we got to focus on the daily chart and see whether or not that is indeed going to take place. And for it to continue, that supply needs to be removed. Okay. Let's look at oil. Oil, we saw a recent run up with oil, but it's just retracing right back down towards this area of demand down here. So we're watching this one. We're not trading it. There isn't anything unique here going on. There's nothing specific in terms of direction or trends to trade. So I am not putting too much emphasis on this chart for any type of direction in the market. Let's look at the dollar. So weakness on the dollar. Why is that? Well, we have supply coming into play here on the daily chart. So that is putting pressure on price to the downside. Okay. We'll see when we look at the other dollar pairs why it's this pressure to the downside is extremely aggressive. The dollar's not been dropping as quickly as the other pairs, but still we see that selling pressure. Okay. Another thing I will point out is that if you take a look at the 6-month chart, we have supply that was recently contacted. Yes, we're breaking through, and it looks like we might be breaking through this at the end of this 6 months, but we don't know 100% at this point if it's going to be broken through and if we're getting significant demand down here. Okay, we don't know that, so we'll wait and see. So far, it looks positive. It looks like that's very possible that eventually we'll see more upside, but we don't know that for a fact. So we'll continue to monitor this and see how it plays out. But supply is in play on the daily time frame. That is what's causing this pressure to the downside. We would need this supply to break, and then we'll see a move up here, which would only bring supply in play here on the weekly time frame, as you can see. So we got a lot of supply on the dollar pairs, a lot of supply. Okay. When we get to the other dollar pairs, I'll show you some other things. But let's go over to the Aussie. So Aussie, we have demand that's in play, as you can see down here. Weekly demand zone came into play here. And we recently got a spike through down here. But as you can see, price didn't remain down there. So this spike through was just an emotional move. Look, you have the same thing here, okay? Some kind of event causes price to move like that, and then it comes back into play in the demand zone. So bullish pressure is expected here, okay? As long as that demand holds, we expect bullish pressure. And on the monthly chart, we have basing taking place here, okay? With the closure of the month of January, we end up getting basing. So we could see a move upwards. And if we do see a move upwards, we'll have that supply coming into play. And not just that, but to signal this move upwards, we would need to see this demand zone break. If that demand zone breaks, that allows for price to move up to the 66s, which is right here, okay, on the monthly time frame. So watch for a break of that daily supply. If that breaks, move up to supply here on the monthly time frame. And then if that takes place, I'd expect to see a move downwards from that monthly zone. Okay. Let's look at the euro. So as I was saying before, I was in short. I got out down here before the rally. Why did I suspect the rally was going to happen? Well, because of what we were seeing with the dollar pairs. So I exited. I think that over time we're going to see price move even lower, but all this stalling action, I don't like it. It leaves room for a move higher, especially when you see what I just pointed out on the Aussie US dollar. There's a very good chance that it can rally. If that rallies, these all will rally. The dollar pairs will continue to drop. So I don't want to be holding short through this type of a mess. I do assume that if price was to go higher, I have two areas where I would suspect that price could reverse from. So I figured I'll just wait until that happens, if indeed that happens, and then I'll look for positions higher up. So I'll continue to monitor the Euro US dollar for another entry. In the meantime, we got the pound. And remember, I was pointing out the pound to you. I told you the pound was contacting some supply here on the weekly time frame, and that's exactly what we got. Price rallied up to supply. Now we were looking at this price structure here on the 4-hour time frame. We were looking for a short signal, and it didn't present to us a decent short signal, so we couldn't take a short trade. Even though we suspect there's going to be bearish pressure coming from here, if there isn't a signal, then we don't have a short. And so this could mean something else is going to happen, or it's just going to go sideways before the expected move is going to happen. But so far, we're not getting the signal that we wanted. Supply still holding and good for it, but if there's no signal, we can't get into a short trade. Okay, so we continue to watch and see if that wants to produce a signal. What would the signal look like? You might be asking. Well, let's open this up a little bit further. Let me take a look here. There's nothing really that I like. No, there's nothing really that I like. No, don't really like anything. There's nothing setting up here. In fact, you know, if I had to suggest something, I would say, you know, because of the bullish Aussie situation with demand and play, there's a very good chance that we see upside pressure come in here. Now that upside pressure is going to come in at the same time as we have the downside pressure. Okay, so it'll be a battle between what pressure is going to be stronger. Is it going to be the buying pressure that we're going to see, or is it going to be selling pressure? This could hold sideways. You know, it could be equal. The pressure from the upside, the pressure from the downside could be equal. The buying and the selling could be equal. And Aussie might just rally up, contact supply. And then when it contacts supply, that just might be exactly when this is going to drop down. That's a possibility, okay? Anything is possible. All I know is that I'm not getting short signals on the chart, okay? And when I don't get short signals, I don't short, period. I stay away. Okay, let's go to the Kiwi. Same thing with the Kiwi. Take a look at the Kiwi here. We've got the Kiwi contacting some demand here. So what does that tell us? It tells us that likely if there's going to be a move, it's going to be upside, all right? Take a look here on the monthly time frame. Demand, okay, potential demand. I did some analysis. It's possible that it's demand. It's hard to know for sure, but it's potentially demand here. And if that's demand, that's going to be putting pressure to the upside on price. So again, we have Aussie showing us signs of upside. We have the Kiwi showing us signs of upside. We have the dollar with supply in play showing us heaviness, that it wants to go lower. So a lot of signs are pointing in the direction that dollar pairs are going to drop and the other ones are going to rally. Let's look at the US CAD. So US CAD, if you take a look here, it contacted some supply, major area of supply here. That is significant, okay? That is significant. That tells us that on the monthly time frame, we are bearish. Okay, there's bearish pressure coming on in the monthly time frame. So that is putting pressure on price to the downside. Okay, and not just that, but we have on the weekly time frame, we have supply. On the daily time frame, we have supply. So that basically essentially tells us that the monthly is bearish, the daily time frame is bearish, and the weekly time frame is bearish. So if you're thinking about going long US CAD, right now would not be a good idea to do that, okay? Because we got pressure from 3 different time frames, putting pressure on price to the downside. So this is suggesting that over time, we're expecting pressure to the downside. Now, do we know the exact path price is going to take as it moves to the downside? No. That's why I personally wouldn't want to be in short. I don't want you to think, oh, well, monthly time frame is bearish, weekly time frame is bearish, daily time frame is bearish, that means we should short. No, it doesn't mean that. It means you shouldn't go long, okay? That's what it means. It means that if there's bearish, we should expect to see some correlation with other dollar-led pairs for a move to the downside. Okay, if it's bearish, that means Euro, Pound, Kiwi, Aussie should be bullish. We're only looking for direction right now. We're not looking for a specific trade per se, okay? Now, if price dropped down here On the monthly time frame, I'd be looking to get into long positions from there because it would be very likely price would rally up. That's where I would be trading the chart. But in terms of shorts, no, okay? Because you don't know how price is going to make its way down there, okay? If it does indeed drop, you don't know the path it's going to take to get down there, okay? You don't know. And so unless you're willing to just open up a trade blindly and put your stop loss above supply zones, in this case, to put a stop loss above that supply on the monthly, your stop loss is so far away from your entry, it just wouldn't make sense to do it like that. All right, so that's my advice to you guys. Okay, so that's the US CAD. Let's look at the US Swiss. We're seeing some bullishness here, and again, it contacted some supply previously here, but this chart's not being, it's not leading the currency market at this point. It's just following along with all the other ones. So there's not much more to see here. US dollar, Japanese yen. Okay, there's the weakness that I was telling you about. We got in short and we rode the momentum to the downside, and then I got out down here. My target was there because of this area of demand that's being contacted. And this is a significant area of demand. Why is it significant? Because if you take a look at the chart, you'll see that we had some demand, or some supply, sorry, up here, and that supply has now been removed, okay? Now you have to ask yourself, why would they remove a supply area? I don't know. Maybe it's because they want to push price higher in the future. That's very possible, okay? So what I do know is that the area where significant buying came in, right? When we look at the chart and the CFTC data and we see what the banks have been doing, they've been buying. So they remove supply, big buying coming from down here. Now we are retracing to that area of demand, okay? Significant demand took place down there. Only problem is, if you take a look at the chart here, what do we got? We got a supply zone in play, okay? On the monthly time frame, that tells me that monthly pressure is to the downside, okay? But you look at the weekly time frame, and what do you see? Supply is being removed and demand's coming in. So we have buying pressure. So we got two time frames telling us something different. We got the weekly time frame suggesting that it's bullish, okay? And why is it suggesting that it's bullish? Because it's removed supply, and so therefore selling is not the priority on this time frame, it's buying. But at the same time, we got on the monthly time frame a significant selling zone coming in, which is suggesting that pressure is going to continue to the downside, okay? So we're in a stage right now where I wouldn't feel very confident buying. We need to see proof that buying is going to be the main driving factor here. But again, like I was saying, I'd be watching carefully on this chart because remember, Aussie looks bullish, Kiwi looks bullish, okay? And US CAD is bearish, US Swiss just following along, Dixie's looking bearish, US dollar, Japanese yen, monthly area of supply in play. This is all kind of telling me that it's likely more downside is possible. Demand's in play. We could see some movement to the upside, but it doesn't mean that move is going to be sustained, okay? There are signals that we'll be waiting for on the chart to see whether or not a long position is going to take place. I'll be mentioning those to members in the forum when that time comes in the observation journal, okay? But that's basically what I am seeing right now. All right, my friends, I hope that was helpful to you. And that's it. I'll let you guys go for now. That's your Forex market outlook for this week. Enjoy your Friday, enjoy your weekend, and we'll see you next week, okay? Take care.